Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up. S&P is up about 1.7%. That's a decent size update today. Nasdaq is about 2%, I believe. Small caps, Russell 2000, almost 3%. A highlight of the day today is actually the biotech. Biotech is up about 4.3%. Semiconductors 3.4%. Everything else, the Dow, Dow is about close to 2. Nasdaq about 2%. So pretty decent size update. Let's try to figure out what we can expect for the remainder of this week and possibly what might happen tomorrow. So you can see right off the bat here, we did see a gap up. So that's the first hour here on this gap up. And we talked about this level on the weekend video. And this is why it is important we track gaps. It is no coincidence that we saw pretty large gap down on Monday, on Friday morning, right? The Friday morning gap down was almost 2% gap down. And that's going to, make a lot of people scared. A lot of people freak out a little bit, right? So there was a big, almost 2% gap down, came down to that gap area. I was tweeting out all day on Friday that buyers must protect this gap if they want to see any kind of upside. We did that throughout the day, though we did see a little bit of fade, pretty much with a big push. This is Friday, right? I'm just recapping here and kind of consolidated all throughout the Friday, throughout the trading sessions. And then this is where it closed Friday at close. And this morning we came to the market. Market gaps up how much? Gapped up about 0.6, 0.7%. And with that, gotten back above this swing high here. And then we thrusted higher in the first hour, right? Clear above the recent swing high, that micro term pivot. That's the second hour, third hour, which is moving sideways, fourth hour, fifth hour. On the fifth hour, we came down and looks like we tagged the prior resistance there. And then that was the sixth hour, the last hour. We push another leg higher, close the day with the 1.77%. So this is a pretty good constructive move from the buyers, right? Let's kind of zoom out here and look at the overall picture. And you can see here, first of all, we cleared this resistance now, and market is continuing to cultivate higher highs here in the short term, right? And we've been labeling this market bullish every single day in the short term ever since we saw this gap up, right? Because that gap was very, very important. And it was very, very important that buyers make sure protect this gap. They did that. With that, we've opened up another gap, and that's a good thing because there's no down gap until we go back to all-time highs here. That's 360s, 358 or something like that. There's no down gap. This down gap was filled. This down gap was filled, right? A lot of these down gaps were already filled. And with that, buyers are opening up their own gap, these up gaps. So we can look at this as a breakaway gap. And we got the second continuation gap, right? And then with that higher lows and higher highs in the short term, we want to continue to give benefit of the doubt to the buyers in the short term. In the midterm, I've been neutral to bearish in the midterm for the fact that we are still in the vicinity of lower high here. But I've explained over the weekend in detail that what the buyers want to do, get up here, right? And neutralize that, right? Neutralize that downtrend threat. Right? We got that lower highs and lower lows. But if the price come up here very close to 342 or in that vicinity, then at that point, we no longer can say that we're in a downtrend in the midterm. Because now we no longer have a lower highs, we have an equal highs. Once that equal highs put in, we can look at this entirety of this move as some kind of a basing pattern, right? Basing pattern, reversal pattern, consolidation, resting pattern, or digestion, right? After an uptrend, right? We saw a big uptrend, come down, move sideways, kind of digest that gain, and then resume to the upside. So that's how you're going to look at it. And buyers are getting very, very close before he's going to neutralize that midterm trend. So we're at 339, pretty much 340 right now. Just 2 more points here on Spider. And we want to see a continuation from the buyers as early as tomorrow. And it'll be better if we maybe if we can able to get up above it and close above it, then at that point, even if this pulls back, we'll consider this as a higher high. So it'll be important how this market behave remainder of this week before we can label this market as bullish in the midterm or even neutralize the downtrend, right? As of today, as of now, I'm gonna call it still neutral. So I was calling it on Friday, neutral to bearish in the midterm, short-term bullish. But I saw so much momentum here, especially with this 2 gaps open. I'm gonna say midterm neutral, short-term bullish. Right? So I removed that neutral to bearish. I removed that bearish label in the midterm. So midterm neutral, short-term bullish, and that's the sentiment we're dealing with going into tomorrow. Let's check out that oscillator here real quick. So we didn't find support, right, on that rising support on the oscillator here, but we actually broke below it. Instead of seeing this thing coming all the way back down, we actually stopped short and made another higher high. So what I'm going to do is I'm actually going to move this right here like this. This kind of things sometimes do happen. Little whipsawing there. And with the oscillators also cultivating higher lows, buyers are gaining a lot of momentum. And this is another reason why I want to label neutral in the midterm. We haven't gotten 342 yet, but I feel like we're going to get there, if not tomorrow, sometime this week. And also, buyers still have some room to move. They're not fully exhausted, right? There's some energy left here, and that's at least a couple hours, several hours. And with that momentum, with that higher low, they should able to, buyers should able to get up here and tag that 342. And I had a lot of questions just as of late, like on YouTube comments and Twitter and Stock Twitch, that like how do you know when to go long when you don't really know until the market make a move, right? How do you know the entry level? Because once you found out that, okay, market is now looking more bullish, but the move has already gone a lot. And since 320, we're at 340, already 20 points up. Well, this is why I gave you these levels. You guys remember this? This is my blog here, twotradersclub.com. I'll been linking it on the description section every video. The levels I'm looking to accumulate again, this was written September 6th, so just about a month ago. And I gave you the level that I will be accumulating, right? It's 325 to 300. And you might think, well, that's a pretty wide range, Kay. Well, first of all, you tell me where it's going to bottom. Do you know exactly where it's going to bottom? Did you know it was going to bottom at 320? Can you tell me it's going to bottom exactly at 325? No one does. Problem is everybody trying to pinpoint that perfect level to go long, and market is going to make sure you're going to miss it, and when you miss it, you're going to FOMO it later. So what you do is, I given you this level, right? And so once it hits near 320, you start accumulating, right? And that's right here. So this is a level. So this is a level. This is a 325, 320. In that vicinity, you start going long. But at the same time, when you're going long, you're keeping in mind that we may bounce at this level, right? But we could also see the market seeing a deeper pullback. So you prepare for both scenarios, because obviously, man, you and I, we don't know for sure if this is the bottom. We may go 320, 320 might be the bottom, 310 might be the bottom, 300 might be the bottom. But none of us can pinpoint perfectly. And despite the fact that we're right in the market, you never know what the market is going to do. We might even go back to 310, right? I mean, yes, sentiment has been very bullish in the last couple of weeks, at least in the short term. And today, things got much bullish now. So I'm getting a lot of comments that say, well, how could I enter long? Because once the price tells us that, okay, market is turning bullish, now it's already too late. This is why I gave you this level to accumulate. So what you do is you start accumulating around 320, right? And then you kind of trying to figure out how you're going to adjust your portfolio accordingly. As the market starts to make its move, right? Does it look more, with this gap up, gap is holding, maybe you want to add a little bit, right? But maybe if you add here at 325, 320, what you do is, okay, I don't know this is the bottom or not, but you add here, right? You know, the market gave you couple days, several days here, several days at 320 and 325. And that's exactly the, level that I given you, right? 320-ish. So you got about a couple days here to accumulate at 325, 320. You first start accumulating, right? At the same time, you prepare, okay, if we see a further decline to 310, I'm going to add more. So I'm going to accumulate longs in this vicinity, 320s, and then I'm going to see how this market behave, and then I will adjust my portfolio accordingly, maybe add more or just wait until what happens. So let's say you added it here, right? And then it got up, it fell back, and maybe you could add a little bit more, just in case we find the support. We did see that bullish divergence here, right? So after the bullish divergence, this thing making higher highs here. Again, that does not mean that's the perfect bottom, because nobody knows where the perfect bottom is. And then you kind of see what happens. And next day gaps up, right? Next day gaps up, we holds above it and continue higher. This way, you don't feel left out. Just be honest with how many of you feeling kind of left out at this point? Maybe you're looking for a steeper pullback. Maybe you're looking for 310. Maybe you're looking for 300, right? It feels as though the pullback was too shallow, right? And maybe that's what everybody was thinking. And that's why markets sometimes won't give it to them. And then what happens is people get scared to enter, and then they ended up FOMOing. And I covered this on the weekend video. They start, they start maybe chasing at the top. And then that thing starts pulling back, and then, you got to go through another drawdown. So it's better, especially in a primary term uptrend, it's better to find the level that you feel comfortable. You feel like, okay, this is a pretty good level that I want to start accumulating. But never trying to pinpoint the perfect level, because none of us, you, me, Warren Buffett, Ray Dalio, nobody can give you 100% guaranteed market is going to bounce at 315.78. You know what I'm saying? Nobody knows. So and this is a level that I given you that I am comfortable with. So you come up with your own strategy where, okay, I'm comfortable with, I'm going long and spider it. I don't know. Let's say if you said 315, well, now you just have to wait, because it never got to 315. We went to 320 precisely. We never got. So if you said 315 and you're faithfully waiting, well, now we're at 340. So what do? You see, so that question arise now. What if, now that thinking of what if this thing never comes down? What if we never see 315? And you start guessing things. So what I do is, that was my first level of accumulation anyway, right? So I start going long in that vicinity, right? And then as it starts to improve a little bit, I start adding a little bit more. And then I would wait. And if this thing does go all-time high, I don't have to FOMO later. I don't have to start chasing it later. Because I never want to buy high and sell low. I want to buy low and sell high. Right? So that's how you kind of, plan your strategy around the levels. That way, because you always have to think, well, if the market does bounce from here, and if thing does go all-time highs, you don't want to start chasing later, and what if this thing doesn't stop and we actually go to 400, right? So I think there has to be certain strategy where this is a level that I'm okay with accumulating here, but at the same time, because none of us know where the perfect bottom is, at the same time you tell yourself, okay, if we do see further pullback, I'm okay with that because I want to accumulate more at the time. So you're gonna have like a different level situation. Like at 320, that's the first level, 310, that's the second level, and then 300, that's the third level. And then those are the levels I'm gonna start accumulating. That way I don't miss, right? As long as you don't think we're gonna go to March lows. If you're in the camp that this market is gonna crash, go back to March lows, then, well, this doesn't help you because, yeah, you wouldn't be accumulating anywhere. Does that make sense? So, well, let's see what happens tomorrow. We do have some space here. See if bulls can utilize this. If bulls can utilize it, I think we can have another bullish day tomorrow. And with that, finally, this is gonna get oversold or overbought. And then, and then bears probably gonna try to take advantage of that. And and at the time, if the price gets back up here about 340, 343 or something like that, and then if it pulls back, that's totally fine because we already got higher high and higher lows, and we also neutralize that midterm trend as neutral now, no longer in a downtrend with that equal highs cultivation. You guys enjoy your evening. I'll come back for you guys tomorrow night, and I'll tweet things out at 2K Kim, see where that oscillator is, and we'll go from there.